Welcome to The Explainer. All right, today we're going to tackle something that, let's be honest, feels super overwhelming for a lot of people: investing. But by the end of this, I promise you, we're going to strip away all the confusion and give you the confidence to finally get your money working for you.
So, you've worked hard, right? You've managed to put a little extra cash aside, and you've got that voice in the back of your head saying, I really should be doing something smart with this. But then you hear words like stocks, bonds, and all this jargon, and it just feels like a completely different language, doesn't it? Well, if that's you, you are in the perfect place. We are about to draw you a simple, clear map to your financial future.
Okay, so here's our game plan. We've got 5 key stops on this journey. We're going to start with the big why you even need to do this in the first place. Then we'll get into the magic of how your money actually grows. We'll cover the single biggest trap for beginners, run through a crucial checklist before you start, and wrap up with what might be the most important part: the right mindset.
Okay, first things first, let's talk about why just letting your cash sit in a savings account, which feels like the safest thing in the world, is actually a guaranteed way to lose. There's this silent killer that's constantly eating away at your hard-earned money.
And that silent killer has a name: inflation. And really, it's a simple concept. All it means is that your dollar today won't buy as much stuff as it did yesterday. It's the reason your parents or grandparents talk about buying a movie ticket for a couple of bucks. It's this slow, steady leak in the value of your cash.
Let's make this super real. Imagine a cheeseburger. Last year it cost you $7. Today you go to the exact same place and boom, it's $10. Now the burger didn't get magically better, did it? It's the same bun, same patty. What changed is that your money got weaker. It lost its power. That's inflation, right there in your lunch.
So here is the main takeaway. Investing isn't just about trying to get rich quick. At its core, it's a defensive strategy. It's the best tool we have to protect the money we've already worked so hard for. It's how you turn your cash from a lazy asset that's losing value into an employee that works for you 24/7. So how exactly does your money work for you? Well, this next part, this is where the real magic happens. It's a force so powerful it's been called the true engine of building wealth. It's called compound interest. And the idea is so simple, it's almost poetic. You earn a return on your money, let's say. Well, that return gets added to your original pile of cash. And then the next time you earn a return, you're earning it on that new, bigger pile. Your money literally starts making its own money. And here's what that looks like in the real world. Think of it like a snowball rolling down a really big hill. Getting that first $100,000 might feel like it takes forever, maybe 7 years. That's the hard part. But then things start to speed up. The second 100 grand might only take 4 years. The third, maybe just 3. You see what's happening? The bigger the snowball gets, the faster it grows all by itself. It's incredible. Yeah, there's a reason it gets called the 8th wonder of the world. This isn't about luck. It's not about being a genius stock picker. It's just math. It's this unstoppable engine that, if you just give it fuel and time, will build your wealth for you. Okay, so you're on board. You get it. Inflation is bad, compounding is good. But now what? What do you actually buy? And this right here is the fork in the road where so many beginners take a very risky turn. The temptation, and we all feel it, is to chase the hot stock, the company everyone's talking about. But just look at this list. The biggest, most dominant companies in the world are constantly changing. The titans of the 80s were not the leaders of the 2000s, and they're different again from the big names of today. Trying to guess tomorrow's winner is, well, it's pretty much impossible.
And look, when you dump all your money into just one single company, you're not really investing. You're gambling. You're putting all of your eggs in one single basket. Sure, it feels amazing if it goes up, but if that company stumbles, or worse, goes out of business, poof, everything could be gone. It's a huge and completely unnecessary risk.
So what's the smarter, safer way
It's something called an index fund, and it is a beginner's best friend. Think of it like this. An index is just a shopping list of companies, like the 500 biggest companies in the US. A fund is just a big pool of money from lots of investors like you and me. An index fund simply takes all that money and buys a tiny piece of every single company on the shopping list.
And just like that, you solve the all your eggs in one basket problem. Instead of one basket, you now own hundreds of tiny little baskets, all at once. With one single purchase, you are instantly diversified. Now, if one company has a terrible year, who cares? It's just a tiny ripple because you have 499 others picking up the slack. You've spread your risk across the entire economy.
And hey, you don't have to take my word for it. The guy who is arguably the greatest investor in history, Warren Buffett, says this is the absolute best strategy for the vast majority of people. It's simple, it's low cost, and it flat out works.
Okay, but hold on. Before you get all excited and run off to open an account, we have to do a quick pre-flight check. You wouldn't want a pilot to take off without checking the plane, would you? Well, same idea here. We got to make sure your personal finances are ready for takeoff first. And there are just 2 things on this checklist. These are non-negotiable. Seriously. Number 1, you have got to pay off any high-interest debt. We're talking credit cards, personal loans, anything charging you more than, say, 7% interest. Get rid of it. Number 2, build yourself an emergency fund. You need 3 to 6 months' worth of your essential living expenses sitting safe and sound in a boring old savings account.
Now, why is this so critical? Well, think about it. If your credit card is charging you 25% interest, paying that off is like getting a guaranteed, risk-free 25% return on your money. You will never, ever find an investment that can promise you that. It's a no-brainer. And the emergency fund? That's your safety net. That's what ensures that when life inevitably happens, your car breaks down, you get a surprise medical bill, you don't have to panic and sell your investments at the worst possible time to cover it.
All right, we've made it to the final step. And I gotta be honest, this one might be the hardest one of all. It has nothing to do with numbers or which fund you pick. It has everything to do with what's going on between your ears.
So what's the number one thing that destroys wealth for the average person? It's not a market crash. It's not picking the wrong fund. It's 2 simple words: panic selling. It's letting fear grab the steering wheel when the market gets rocky. And trust me, it will get rocky sometimes. That human instinct to just get me out is absolutely devastating to your long-term goals.
In this chart, wow, this shows you just how costly that fear can be. Research has shown that if you had simply stayed invested through thick and thin, you'd have done really well. But if you got scared, sold your investments, and just missed the 10 best days in the market over that period, your total profit could have been slashed by more than half. And the craziest part? The market's best days often happen right after the worst days. And that really brings us to the single most important rule in all of investing. You need to burn this into your brain. Time in the market is way more important than timing the market. Success doesn't come from being a psychic who can predict the future. It comes from having the discipline to just stay in your seat and let time and compounding do their thing.
So there you have it. You have the complete roadmap. You know why you need to invest, you know how your money grows, you know the smartest way for a beginner to get started, and you know that your biggest enemy is your own fear. All the pieces are on the table. Your future self is waiting for you to make a move. The only question left is, what are you going to do today?